Hello, everyone, and welcome to the latest installment of the How Good Innovation Series. This is the last session in our series about true cost accounting. Thank you so much for joining us again today. I'm really looking forward to 45-minute discussion. As a way of introducing one another for audience members with their name and where they're based. If you'd like, you can put your role or your company into the chat, and then we can get to know each other a little bit, even though we won't be introducing ourselves to one another. My name is Leah Wolf. I am currently in Brooklyn, New York, and I'm the head of regenerative education and content here at How Good. I am so excited to be speaking with our two panelists today. We are joined by Ammar James, a deputy portfolio manager at VanEck, and Dan Altschuler-Malik, managing partner of Unovis Asset Management. So we are going to be discussing how they make investment decisions and predict sustainability trends in the food, agriculture, and CPG sectors. So it should be a fascinating discussion. Just to run through a quick agenda for our time together today, we'll finish up our introduction. We'll have our 40 to 45-minute conversation with our panelists. And as we continue with our discussion today, I'd like to invite the audience to put any questions that they might have for our speakers into the chat. I'll do my best to get to them and relay them to our panel. My colleague Kate will also be monitoring. Yeah, we'll try to get those across to our panelists as they come in or toward the end of our session. And so with that, I'm going to stop my screen share and give a warm welcome to our two panelists, Ammar and Dan. Thank you so much for joining us. I think that it would be great to do just a short introduction for the two of you, since many of our audience members today maybe don't have the background in finance. A lot of our sort of pre-competitive collaborative community here is in the CPG, retail, food service sector. And so I think it'd be great if each of you could talk a little bit about what it is you do at VanEck and Unovis respectively, and maybe a little bit about how you fit into both the finance world and the food systems and sustainability world, maybe that intersection. And so Ammar, if you'd like to get us started, that would be wonderful.
Sure. Thanks to be here. So my name is Ammar James. I'm a deputy portfolio manager at VanEck. It's an asset management firm based here in New York City, roughly $65 billion in assets under management across a variety of strategies. Most of them are public, investing in public equities. And so I'm at VanEck, I'm the agribusiness analyst. And so I primarily work on a natural resource equity mutual fund that invests in public equities globally. And so since it's a natural resource equity strategy, it invests basically in energy, mining, and agriculture. And so I help manage the agribusiness sleeve. And then we also recently, a year or two ago, launched an environmental sustainability strategy, again, focused on public equities. And that just invests in the whole gamut of environmental sustainability. So everything from solar panels and things like that, all the way down to agriculture technology. And within that kind of small bucket, we realized there was a very interesting kind of way to perhaps make a pure play strategy just based on agriculture technology. So last year we launched an actively managed strategy that's still rather small relative to the broader natural resources strategy, but that focuses specifically on agriculture technology. Again, it's public equities. So right now some small mid-cap names, not too so there are a few large companies, but by and large pretty small. And then lastly, we do some stuff on the private side. But that's just investing directly out of VanEck's balance sheet. But we have made some ag tech investments through the firm. So that's kind of where we fit in.
Excellent, thanks so much. And just out of curiosity, what brought you personally into kind of the sustainability in the food space? Is it a personal interest, or was it just that's the way that your career took you?
Yeah, good question. It's kind of 50-50. So I joined VanEck about 3.5 years ago. But prior to that, I spent almost 8 years at Cambridge Associates, which is an investment consulting firm headquartered in Boston. And I was on the real assets investment team there. And I was a little bit of a generalist, just doing real assets in general. So energy, mining, infrastructure, some agriculture, and I really got to know agriculture really well, especially on the private side there. And so that really started to, pique my interest. And so when there was an opening at VanEck to just become a dedicated, agriculture, agribusiness analyst, I kind of jumped at that opportunity.
Great, thank you so much. Dan, do you mind introducing yourself and kind of where you fit in to the sustainability, food, and investing space?
Happy to do so, Leah. Thank you to you and How Good, first of all, for the invitation. It's wonderful to be here. So my name is Dan Altschuler. I'm a partner at Unovis Asset Management. We are early stage impact investors focused on food systems. So whereas Ammar is looking at companies which are much later down in their life in terms of size, revenue, resources, etc., we play on the earlier side and we work with founders sometimes at the pre-seed level, so the initial capital, and we start positioning them into a point of growth. So we invest from pre-seed all the way to Series B. And we focus on companies that are transforming the food systems into one that has, the focus on improving food security, but also on improving nutrition, and most importantly, on reducing harmful impacts both to the environment and to animals around the world. We've been doing this for about 8 years, and our first two funds focus primarily on companies developing direct replacements to animal protein products. So these are food products using proteins that are coming from plant-based sources through fermentation, such as mycelium, and through cultivated means to create the products that everybody loves. Yes, so that's us in a nutshell.
Excellent. It sounds very exciting. So Ammar, I'd like to start by asking you why, in your opinion, the sustainable food and ag investing space seems to have exploded so much over the last decade or two. And if there's maybe like a catalyst that you typically point to, or if it's a little bit more nuanced and iterative than that.
Yeah, that's a really good question. I'm not sure if there's a single catalyst, but maybe just the time is right. I mean, one thing that kind of shocks me is that there's a big conversation happening right now about environmental sustainability broadly, but the problem is most of that conversation has been focused on trying to move away from fossil fuels, which is fine. I think it's something that we ultimately probably need to do anyways. But it's just interesting because, even, if you look at the Paris Agreement in 2015 and even last year's COP27, the world won't even meet its climate goals without addressing agriculture in some way. So agriculture and land use comprise roughly a quarter of global greenhouse gas emissions, but are just kind of left out of the conversation. So I think, that combined with some of the research and development breakthroughs that have been happening over the past 5-10 years, have really started to, make that interest come alive. And there's been a lot of, venture capital, coming into the space and really pushing things along, which has been really exciting to see.
Absolutely. And I think that you touched on an important point there. Is something How Good talks about a lot is that carbon is, of course, very important, and greenhouse gas emissions, whether it's, processing or transportation, is critical to pay attention to. But something like 70 to 90% of any given food product's impact happens before it even leaves the farm gate. And so trying to focus on that more holistic picture is so critical. Dan, I'd like to ask sort of a similar question of you. How have you seen the investment landscape evolve in the sustainable food system sector, and particularly in the CPG space over the last few years or decade?
I think there's a couple of evolutions that have happened over the last 20 plus 25 years that include several things. First is a wider access to information. Around the world, everybody carries a phone, so everybody knows what's happening. And so there is the availability for information to travel more broadly. That's on one side. And on the other, I think there is much stronger awareness between the relationship that food has with our bodies, as well as the food with the environment. And so when we add up all of these things, plus, like Ammar was saying, the awareness that we have issues in terms of climate, then this has brought it top of mind to consumers. And at the same time, in parallel to this, we have had a lot of different technologies that previously were used for other fields, such as pharma, such as medical, that found their way into the food system. And so what we have here is just an opportunity that is ripe for innovation. Is going to require the blood, sweat, and tears of entrepreneurs. It's going to require capital. It's going to require consumers to accept these products and embrace them. And I think the other player that unfortunately is still not at the table in a way that I would like to see them as strong is governments. Governments have played a key role in building any industry, automotive, telecom, the food industry as a whole, and yet they have not shown up as strongly as I would like as it relates to sustainability. And we are hoping that that will change. And this is not just any one government, it's governments around the world, because everybody has a vested interest in transforming how the world is fed.
Yeah, absolutely. And I mean, obviously we're seeing some regulation, coming down from the EU. The CSRD, I think, is something that's quite exciting and probably is something that you guys discuss quite a lot. There's also the new SEC regulations, which I think are finished with their comment period at this point. We'll see if they do another round. But I'd be interested to hear, Dan, and just to dig a little bit deeper into that, how you see the role of the private and public sector collaborating in a way that accelerates sustainable practices in the food system. Do you have any, examples or dreams about the way that might go?
I do have a dream. So as I said, we invest in companies developing replacements to animal proteins. And the reality is that, at least in the US and in other parts of the world, products such as meat, poultry are subsidized by governments through different ways, that they're subsidized through the whole agricultural chain. And there's an understanding, there's a recognition on my part of why these subsidies exist. But it would be wonderful if these subsidies found their ways into companies developing replacements to animal proteins, products that are much more efficient in terms of the resources needed to create a calorie versus a calorie. So here is my big dream, is for this to be included in different ways in the subsidies, so that at least we level the playing field.
Sure. Yeah, and Ammar, I'm going to pose this sort of the same question to you. Are there any policy or regulatory changes that you think would be particularly helpful in fostering a more favorable environment for sustainable agriculture investments?
Yeah, I mean, to some extent, to some small extent, it happens. The USDA, National Institute for Food and Agriculture, the NIFA, I mean, just came out last week with a $46 million grant package. That's supposed to help, help farmers do sustainable farming practices and do a little bit of marketing. But in the grand scheme of things, it's not really pushing the needle that much. And even if you look at the climate provisions in Biden's Inflation Reduction Act, that included $20 billion for climate mitigation and adaptation in the ag space. But that still falls pretty short of the support offered to some of the other sectors, So, unfortunately, though, its specific policies appear to be good and there's some practical initiatives, I feel that they'll do not too much to, unfortunately, reduce the, emissions from the agriculture sector, which is, like I said, one of the most neglected sources of greenhouse gases. And so, and I guess in my view, there's two key areas where, some of the policy falls short. Obviously, like Dan mentioned, the subsidies would be great, but there's also really not too much on, for other things, like, for example, fertilizer production and, also alternative meat production as well. So, for example, any incentives for U.S. nitrogen fertilizer companies to produce something like green ammonia, which would really avoid the use of fossil fuels and natural gas as a feedstock, that would reduce emissions drastically. And, obviously, incentives for U.S. food manufacturers to produce alternative meat products would also do a lot.
Thanks so much. I'm interested to hear how both of your firms sort of evaluate potential investments to ensure that they're aligning with whatever ESG criteria you might have. Dan, do you want to start with this one?
Sure. So all of our investments need to have go through our sustainability review, if you will, and that's trying to understand are the products, the technologies, the services that these companies are proposing bringing to market, are they going to be a better use of resources in different ways? Is it going to reduce the energy consumption and created? Is it going to reduce the amount of inputs? Are the outputs going to be better? And so we go through different chains, not to plug it in, but How Good has been a wonderful tool for us to use. But at the same time, we want to be mindful that, especially when we're working with startups have a lot on their plate. They're trying to get from 0 to 1. And during that time, you can't really ask them, you can't put a weight on them that is too much of a burden which would impede their forward progress. So we try to be flexible with them as it relates to that and just help install best practices so that as these companies scale up and hopefully grow to be big players, this is part of their DNA in terms of how they think of new products, how they think of packaging, and how they expand those values to their consumers.
Sure. And also in terms of kind of the pressures that startups and smaller companies are under. I think that one of the major roadblocks that we certainly hear about at How Good is scalability when it comes to sustainable products. And so I'd be interested to hear how you kind of think about and evaluate scalability when it comes to some of the sustainable food products that are coming across your desk.
Well, first, not everything is scalable. And we've come across some amazing products that maybe they are very artisanal. So there is no known machinery today that can scale them up. Doesn't mean it's a bad company. It could probably be even a good investment, but we need to be mindful if it's a venture-worthy investment. And that means that within a relatively short period of time, in our case, it's 7 to 10 years, this is a company can bring outsized returns. If it's not, what I do many times with these companies is I try to help them direct them to other sources of capital that might be interested in the space. So I think wanting everything to scale is not a good mentality. I think all companies should exist if an entrepreneur wants to put their backing into it, but it's helpful for them to understand the realities of what is a very complex market, especially the food market in the US.
Yeah, Ammar, I'd like to see if you have anything to add to that, but I'd also like to come back to the question of how you and your team evaluate potential investments to ensure they align with VanEck's ESG criteria.
Yeah, so that's a good question. So at VanEck, we've developed this, a proprietary set of environmental sustainability metrics that we track for every company, and those metrics are underpinned by the UN SDGs. And just broadly, the framework is we call it CLAW internally, and that stands for climate, land, air, and water. We've got like a number of metrics that we track for each of those verticals, and when we talk to companies, we really encourage them to routinely measure, quantify, and report these factors to demonstrate their current environmental aspirations and obligations. And we really try to use this framework as a way to engage with management a little bit more often. It's kind of tough because, like Dan said, some of these companies are sometimes very early stage. Maybe when they get to the public stage, they're typically revenue positive, but perhaps not profitable. And so we need them to have a kind of a balanced approach in terms of, focusing on profitability, but also focusing on environmental sustainability at the same time. So not all of the metrics are metrics that they even report in the first place, but we want to let them know that these metrics are important for investors like ourselves, and that we will be continuing to ask about them, regularly, into the future. So that's kind of how we think about it.
Mm. Yeah, and so we've spent a little bit of time now talking about the pressures, the challenges, scalability of sustainability. I'd like to hear if you have an example of maybe a success story of investments in sustainable ag or ag tech that have had a significant impact on the environment, on the food system, or on the health of people.
Sure. Well, I mean, so even though we've been following the space for a number of years, we really just started to put money into it, or put money into work about 12 months ago. But, I can highlight two names, on the public side that I think, perhaps some of the people in the audience would be familiar with. And these are names that worked really well for us last year. So, the first one is John Deere. So I think John Deere is actually a great company to profile because it was among the first to publicly admit that, some of the older approaches to farming and increasing agricultural output were basically no longer viable. And so, a few years ago, it reorganized its entire business around production systems and precision agriculture in particular. And, it mapped out every job farmers do and determined areas where the company could unlock value. And the result was about $150 billion worth of incremental TAM. So, that all culminated towards an announcement last year where Deere basically launched fully autonomous driving tractors in addition to making improvements on emissions. And so, in many ways, John Deere is essentially becoming this weird hardware technology company. Actually, it's got this robust tech stack, and that it's built on connectivity and cloud services and real-time information and really strong data analytics. It's not the John Deere that our parents would kind of know. One example is a product like See and Spray. It's a device that you attach to the back of a tractor that uses cameras to take photos of crops as the farmers move over their field, and then with the help of real-time machine learning, the sprayer will only spray areas it sees and identifies as weeds, leaving the other areas alone. So that drastically reduces herbicide application. So there's all these sorts of, cool areas in the ag machinery space that we're seeing. So that's just, one company that I'd highlight.
That's so interesting. Thank you. Dan, I wonder if you have some examples of what you think of as a success story in the of investments in more the sustainable CPG space that have made an impact.
So impacts, and maybe not currently the best of investments, at least when they went public, I can think of Beyond Meat and Oatly. Yes, those stocks, and so for full disclosure, we were investors in both. We no longer are. And we don't play in the public markets. We play in early stage. So public markets, it's outside of our areas of expertise. But if we see what these companies have done in terms of awareness for various categories, they are starting to move the needle. They're not doing this in a vacuum. You could say that the larger CPG companies, Unilever, Danone, Nestle, all are recognizing that consumers are demanding sustainability more and more from the products that they produce. But at the same time, there is this tension because consumers demand it, but at the same time, consumers can only pay so much for certain products. And so we're starting to see a shift in how these practices are coming about, but we need to recognize it's going to take a long time because food is a very slow industry. You're talking about repeat purchases day by day. You need to maintain quality. You have controls for safety standards. Products are perishable. So all of these realities do make it harder for CPG and food manufacturers to change, whereas some other technologies in other fields of the value chain, such as agriculture, using robots to spray, etc., can be implemented in maybe a shorter period of time. I would also say that I think a lot of this awareness I can attribute to the broader natural and healthy retailer category, and in particular to Whole Foods. Think about it, 25 years ago, it was a joke to shop at Whole Foods because the price points were so high. And at the same time, the awareness, the education, the culture of eating better has permeated across, to lower income levels, to other countries. So all of this is working in unison. So I'm very hopeful for the future as it relates to the food systems improving. And at the same time, I'm aware that a lot is required still.
Yeah, absolutely. Next, I'd like to talk a little bit about emerging technologies. Ammar, you mentioned precision agriculture, but I'm thinking of things sort of along the lines of vertical farming, aquaponics, blockchain even. How do you see some of these other technologies playing in a role in sort of driving these sustainable ag investments?
Yeah, it's something that we take a very hard look at. I would say, to sum up in one sentence, they all seem extremely interesting, and the environmental sustainability benefits of them seem very attractive, but the economics still are very, very challenging. Take for example a company like AppHarvest. So AppHarvest manages the largest and most technologically advanced greenhouse in the world, and it's basically on this path towards autonomous farming using robotics and machine learning and AI and all of that, which comes together to help evaluate crop health and maximize harvests and yields. And it has this massive 60-acre facility in Kentucky, and that's actually where it gets its name from. AppHarvest stands for Appalachian Harvest. And they're still a relatively new company. They just made their first batch of commercial grade vegetables in 2021. But and so it's also, I would say there's still some uphill battles in terms of profitability, but if you look at the environmental sustainability metrics, they seem phenomenal. It uses 100% recycled water, has zero chemical runoff into the water system. It uses zero pesticides, and it generates virtually no food waste. And at the same time, because it's an entirely enclosed and controlled system, AppHarvest is able to do what traditional farmers could never dream of doing, and that's have multiple harvests within the same calendar year. So, a traditional outdoor farmer plants in the fall and harvests in the spring, or vice versa, depending on what side of the equator you're in. But AppHarvest can churn out planting and harvesting up to 5 times a single year. And so that kind of farming generates between 5 and 30 times the production on a per acre basis relative to that conventional outdoor farming, depending on what crop you're trying to grow. So the environmental sustainability profile is very interesting and exciting to us. It's just, we really need to see the economics work out as well.
Yeah, that's so interesting. And I wonder also how much or what sort of conversations are happening around regenerative agriculture, carbon sequestration, and maybe some of the sustainable agriculture practices that may have a net positive impact. Is that something that's being talked about in your space in terms of maybe some of the, the ways forward?
Yeah, it's starting to. I wouldn't say it's popular by any means, but we're starting to see some incentives for farmers to change their practices, and you're really starting to see the biggest push on that in terms of carbon credits. So, there's some companies that are they've got pilot programs out there where farmers don't really necessarily feel like they need to change anything, but if you say, hey, look, if you change your farming practices, this generates carbon credits, and we can sell this on a voluntary market or something, and we will handle the whole carbon credit market and exchange for you, and then you kind of get a dividend or a cut from that. Okay, now farmers are suddenly a little bit more open to changing some of that stuff.
Yeah, absolutely. That makes sense. Dan, I'd be interested in posing the same question to you. Are there, in your side of things, do you feel like there are more conversations happening around regenerative ag? And if so, what do you think of it?
We're focused much less on ag. We're not an ag tech investors, so I have to say. But it does relate to the sense that we do have a lot of companies that are starting to develop new ways of producing animal proteins. Some of them we have a company that is actually growing animal proteins through plants. The company is called Nobel. And so basically they have found a way for soybeans to express casein, which is a protein found in dairy milk that gives cheese that great ooziness that we all like, and meltability and structure. So I think, as to your previous question, what other technologies do I find interesting right now that have the opportunity really to move the needle? One of them is plant-grown proteins, but the other is precision fermentation. Yes, it is still in the earlier stages, but basically you are using microbes to create certain specific proteins that can be used, again, for dairy products or for other places where animal proteins have a greater functionality than any protein that we have found in plants. A lot of these companies are in their earlier stages. They are still trying to figure out, yes, we have the technology to do it, but now the question is, can we do it at scale? Can we do so in a way where the margins will work? Because there are very limited margins in food. The system has been very efficient, and thanks to a lot of work over the past 100 years. And then can we find the capital to really create these large infrastructure investments? And I think that's something that will play out during the course of the next decade. And I think it's very interesting to see, because we have governments all over the world in different countries, such as the Middle East, where for concerns such as food security, they are recognizing that they have to channel more resources into this, even though it's not a sure thing at the moment. So a lot of exciting stuff in that area.
Yeah, definitely. I'd be interested to hear, Ammar, what some of the challenges that investors are facing when they're trying to identify and support some of these innovative and scalable solutions. Is it in the identification process? Is it in the vetting process? Is it in the sort of internal buy-in process and getting people within your organization on board for some of these, some would say riskier kind of innovation and riskier innovation investments?
Yeah, I would say all of the above. So, I mean, one of the big challenges is, just like Dan alluded to, one of the big challenges is just the pace of technological advances. There's a lot of research and development going on, and a number of competing technologies. Not all of them are going to win. And so it's a challenge to try to figure out which one is going to win and which ones are going to be the losers. You could have a nuanced view on the ag machinery or alternative proteins or whatever, but if you have a complete ag tech portfolio, you can kind of diversify away some of these risks. But if you're a larger investor and you only have one bullet, it can really be a challenge deciding, where to go or how to play the space. And then in addition to all of that, there's also regulatory risks. We're not exactly sure how things are going to pan out for, some of this stuff, even on the alternative protein side. So, so certainly a lot of challenges. At the same time, there's a lot of opportunity as well. There's a lot of growth potential here. So, how we've been communicating it at VanEck is that this is kind of like a growth diversifier. So it really shouldn't be what role does ag tech play in a portfolio? We don't necessarily think this should be in the natural, the real assets or natural resources or inflation protection bucket that agriculture typically sits in. This should be instead competing for dollars in the growth portion of the portfolio. So this is a growth diversifier, and that's uncorrelated with some of the other things that you have in a portfolio.
Yeah, absolutely. And it's, oh yeah, please, Dan.
Yeah, just building on Ammar's comments, I think what he was saying particularly applies to the larger food corporations around the world, where they are active players. They have been investing either through funds or through their own CVCs, corporate venture divisions, and they're very excited about this technology. But for them to implement it at scale is going to take a long period of time. So things right now that we are seeing the small startups doing at the micro level, it might take 5 to 8 years before, but when that happens, I think we're going to see significant impact. And so I'm very excited. But yes, it is a growth play. It's just a growth play within the confines of the timing for food, which is very different than other industries.
And in terms of sort of attracting investment from a firm like Unovis, I think that because we have CPGs that are probably on this call, I'm sure they'd be interested to hear what advice you might give to someone who's looking to attract investment from a firm like Unovis, and particularly I'm thinking about women and marginalized folks who we've seen studies and articles come out recently talking about how they're so underinvested in the space. Do you have any advice for people?
Well, there's two parts. First, let's address diversity. Definitely, diversity is a win-win for everybody. It's been shown how female founders, for example, are wonderful performers. So we try to take as many active steps as possible to avoid any bias that we might have, conscious or unconscious in that fact. But still, a lot more needs to be done around diversity. Just full stop. As it relates to what we are looking for entrepreneurs, first, we're looking for unique ideas, not Me Too's, but ideas also that will be able to scale, definitely. Ideas that can bring products to consumers that consumers are going to want. So not just because it is sustainable, we need to think that in food, people purchase food products once because of curiosity, but that's not the business. The business is to transform consumer behavior. So you want products that are delicious, that are nutritious, and that are within the confines of margins that are realistic to maintain a business. What I would say that my biggest advice, especially from the past 5 years learning lesson, where there was a lot of money for the industry, is that it's okay for entrepreneurs to be scrappy. It's okay for entrepreneurs to take their time to really prove out their ideas and that they have a good product. And they should not be thinking about scaling, within the first 3, 4, 5 years, regardless of what their investors say. They should take time. It takes 8 to 10 years to build a successful food company at the very least. And I think right now what we had was different ideas from other sectors where it takes a lot shorter period of time to grow a social media company or a tech platform. And that just doesn't apply to food. So entrepreneurs should be patient. It is a long ride.
That's so interesting. That's really good advice. And while we're sort of in the advice column section, Ammar, what advice would you give to investors who are maybe interested in diversifying their portfolios to include some more of the sustainable agriculture piece or create more of a positive environmental impact?
I think I would just echo what Dan said in terms of looking for investments. Well, first figure out whether you want to play on the private or public side, because there certainly is different risks and different opportunities there. Another thing is understand what the benchmark is, and understand that maybe this is not a natural resources play that'll help you with inflation protection like typical large cap agricultural companies or just natural resource companies might do. These are really growth names, and should be kind of in your growth bucket. I think that's really it, and not to get too bogged down in the technology and things like that. Maybe having a little bit more diversification, that definitely goes a long way. Excellent,
thank you. So I think we're coming into the end of our time together. So for the last question for each of you, we've talked about a lot of different solutions, a lot of different things that we're excited about or trends in the space. If you had to leave our audience with one thing that you think requires the most urgent investment in the sustainable agriculture or food space, what would that be and why? And I'll whoever feels inspired to chime in first should feel free to do so.
I'll start with plastics. It's my pet peeve. It's a very sad reality of the food system that we have today, that even the companies that want to do good also need to use materials that are just not good for the environment. And then we need to do so because otherwise the food is not kept in the right conditions. So we have this unfortunate tension. So I think, and there's companies that are working on this, but still we haven't seen anybody scale yet to a strong point. And that scaling will require first to scale for top tier products, and then it'll trickle down within developed nations. But then how do we take this to developing countries? A recent article in the Philippines and the amount of trash that is created there for small purchases that are used on a daily basis because consumers don't have a lot of income. So they need to do micro purchases once or twice a day. It's very sad. It is a reality that needs to be addressed because we're all suffering because of that.
Yeah, absolutely. And I really appreciate the expanded perspective, because I think often in terms of sustainability conversations in the food system, it's very US centric, it's very Eurocentric, and it's easy to forget that sustainability is often a privilege and has a socioeconomic sort of gate. And so trying to think larger and more globally about the entire value chain is so critical. Ammar, I'd love to hear what you think needs the most urgent investment going forward.
Yeah, so I think I'll leave you with two. So the first one is fertilizers, and the second one is reducing food waste. So on fertilizers, most crops tend to need some combination of nitrogen, phosphate, and potassium. And so, if we just focus on nitrogen for a moment, the primary source of nitrogen fertilizer comes from a chemical called ammonia, which is typically produced at an industrial scale using fossil fuels, specifically natural gas as a feedstock. And the process requires a significant amount of energy to produce and is a major contributor to greenhouse gas emissions. So green ammonia, on the other hand, is produced using renewable energy sources like wind and solar and hydro to power the production process in a new kind of chemical reaction that does not require carbon from fossil fuels. And so producing ammonia in this way, releases little to no carbon dioxide into the atmosphere, making it more environmentally sustainable alternative to conventional ammonia. So that's number one. We need a little bit more, and there's some fertilizer companies that have pilot projects are already going, but we need to see a little bit more of that. And then the second thing on reducing food waste. So, reducing food waste occurs at virtually all stages of the supply chain, from production, post-harvest handling, processing, distribution, retail, consumption. In general, I would say most studies show that the highest levels of food waste actually occur at the consumption stage, which refers to households, restaurants, and stuff like that. But significant amounts of food waste can also occur at the production and post-harvest stages, and particularly in developing and emerging market countries where the infrastructure and the technologies for handling and storing of some of the food are lacking. So, for example, food may be wasted due to inadequate harvesting techniques or technologies, outdated machinery, and a lack of storage facilities and poor transportation systems. So there's a really big opportunity in emerging and developing countries for this kind of infrastructure.
Wow, fascinating. Thank you both, Dan and Ammar, for your time today. I know you're both very busy, so I appreciate you joining us. I personally learned a lot, and I think that we can leave it here with a heartfelt thank you, and a thank you to our audience for joining us as well. If you'd like to reach out to me or anyone at HowGood, as well as Ammar and Dan, you can find them on LinkedIn. And I look forward to seeing you all again very soon. Thanks so much.
Thank you, Leah. Thank you, Ammar. Thanks, everybody.